The goal of factor ETFs is to isolate certain financial attributes like low volatility, dividend growth, profitability, and so forth, with the purpose of delivering smoother performance that hopefully outperforms. Multi-factor funds typically use a combination of factors, and today's ETF battle is a triple header between factor ETFs from Invesco and VanEck. So who wins the battle? Stick around to find out. I'm Ron DeLegge, and this is ETF Battles. Great to see you again. Now, the ETF matchups that we do on this program come from you, the audience. So if you think there's a certain battle contest that you'd like to see or that we should do, send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. We could do double, triple, and quadruple headers, so make it good. Also, don't forget to visit the description section below. I've got links to our program judges, along with links to our program sponsor, Direction, so don't be a stranger. I've also got fewer resources with download links to free audio and ebooks and other goodies, so be sure to check that out. Now, today's ETF request was sent to us by a viewer named Mike Reyes, and we've got a pair of ETFs from Invesco, ticker symbols SPGP and OMFL, going up against a factor ETF from VanEck. That's MOAT, M-O-A-T. Thank you very much, Mike Reyes. Judging today's matchup are two of the top ETF analysts. We've got David Dierking with TheStreet.com and Frank Tedesco with Astoria Portfolio Advisors. Guys, great to see you. Welcome back.
Thanks for having us back, Ron.
Thank you, Ron. It's great to be back here.
So we got our four battle categories: cost, exposure, strategy, performance, and mystery. Mystery, of course, is where you, our judges, can surprise us with a certain factor or thing that you feel is really important to today's contest. Our judges can nominate wildcard ETFs, or they can opt for split decisions. I've got the scorekeeping chores, and at the end of the show, we will declare an overall winner. Keep in mind, none of the battle outcomes that we ever do on this show are predetermined or known in advance by myself or our judges. So let's blaze through our battle categories, beginning with cost. Dave, please get us started.
Yeah, these three funds are actually very big, very liquid. So great from a trader standpoint. Trading costs are very minimal. So I think we can judge this one pretty much just by the expense ratios. And in that case, OMFL is at 29 basis points. SPGP is 34 and MOAT is a little higher at 46. So I think OMFL here is the winner. Again, both or all three of these are great, big, liquid, tradable funds. So overall on cost, though, OMFL is the winner.
That's a strong start. Thank you, Dave. You're up next. Frank, how do you see it?
Dave, you hit the nail on the head. Very liquid securities, some differences in expense ratio. So if it really matters to the investor, you got 29 at the minimum here for OMFL for the win.
That takes us next to exposure strategy. So this is where we really get into the nitty-gritty of what these ETFs do. Frank, break it down for us. How do you see it?
Great. Thank you, Ron. This is an interesting battle because, yes, they're all multi-factor, but they're all managed differently. So we'll go first with OMFL. They're all index funds, by the way. OMFL tracks the Russell 1000 Dynamic Multi-Factor Index. And what this index does, it reweights securities based on economic cycles. So it rebalances on cycle signal changes that are telegraphed to Invesco that they feel are worthy of a rebalance. And it can rebalance as frequently as monthly. That's OMFL. SPGP tracks the S&P 500 GARP index. So it invests in 75 of the highest scoring growth companies in the S&P 500, but they apply both quality and value metrics as well. So that's where the multi-factor comes in to play. And those companies are ranked by their growth score. MOAT, on the other hand, tracks the Morningstar Wide Moat Focused Index. And this is put together by over 100 analysts at Morningstar that rank companies that are believed to have moats. Then the other portion of this is that they stagger the reconstitution, which I think is really interesting and you don't see too often, where there's two portfolios comprising half the weight of the portfolio each, and they rebalance semi-annual but staggered. So first half of the portfolio is rebalanced at the end of one quarter, and at the end of the following quarter, the other half of the portfolio is rebalanced. So each have very different constructions and management styles. But for this, I'm going to go with SPGP. I just really like the way that they blend quality and value with the growth. I think they're able to find great companies within their portfolio. And we'll see that in some other categories here as well.
All right, I got you down for SPGP. Thank you, Frank. David, you're up next. Break it down for us in terms of exposure strategy. How do you see it?
Yeah, I'm going to choose SPGP as my winner as well. And the reason I'm doing that is because I really like how explicit it is and how transparent it is, and how it's selecting the stocks for its index and its portfolio. And for the record, I think all three of these funds have very good, very robust strategies. I think they're very targeted to what they're trying to accomplish. So I think this is, choosing between three really good funds here. But the thing I don't care for quite as much with OMFL, for example, it starts by Invesco determining where we are in the economic cycle, and how is that measured? Well, we don't really know. Invesco says that, and with MOAT, kind of the same thing. What's their definition of a sustained competitive advantage? Well, we don't know because Morningstar just says so. At least with SPGP, I like that you can look at specific metrics like earnings per share or return on equity or the degree of leverage that these companies have. So you can sort of identify much easier how these stocks are getting selected for the portfolio. So again, all three of these, I like the overall strategy that they use. I think they do a real good job of selecting stocks for the portfolio. But again, I'm going to go with SPGP just because I like their transparency a little more.
Well, that takes us next to performance. And Dave, you're still up. So how do these three ETFs compare?
Well, I think this one's a little more clear-cut. I'm going to go with MOAT as the winner here. If you look at the historical performance, whether it's year-to-date, 1 year, 3 year, 5 year, that's about as far back as we can go measuring all three of these side by side. MOAT has the best performance across all of those time frames. If you look at risk-adjusted returns as well, just to make sure that any of these funds aren't taking unnecessary risks in order to get those returns, MOAT also wins on the risk-adjusted Sharpe ratio as well. So I think this is pretty clear-cut. It's an easy winner for me. I'm going to go with MOAT.
Frank, you're up next. For performance, how do you see these three ETFs comparing?
I disagree with nothing that Dave said, but I'm going to throw in one other additional thing to consider when investing in one of these three products. And so my winner, after everything that Dave's saying being true, MOAT is the best performer. My winner is SPGP still, because if you look at the price to earnings, you're getting a pretty big discount relative to the other funds. And I think as an investor, that's something that you should consider, what the multiple you're paying is for the basket of securities. And this really is growth at a reasonable price, because despite it coming in really second in performance, at the price that you're paying for those stocks, you're getting a massive discount relative. I'll put some numbers out here for you. 14.3 PE for SPGP versus MOAT at 20.9 and OMFL at 25.5. So as you spoke about that explicit portfolio construction, you're seeing that with this statistic paired with the performance numbers. So I'm going to go with SPGP.
You're such a contrarian. I got you down for SPGP. That's about as stubborn and contrarian as you get. And I actually do kind of like it. Very good, Frank. Thank you very much. That takes us next to the mystery battle category. And this is where our judges can give us that key factor that they think is really important to today's contest. And so, Frank, I'm going to ask you, what is your mystery battle category and which of these three ETFs wins it?
Yes, Ron, I got ahead of myself in my last answer. I was reserving valuations as my as my mystery battle category, and I just gave it away that SPGP is my winner, considering performance as well. So I'll keep it concise and go with PE ratio, and we got 14.3, like I said, for SPGP, 20.9 for MOAT, and 25.5 for OMFL. So looking at valuations, all things considered, SPGP is my winner for my mystery battle category.
Thank you, Frank. David, you're up next. What is your mystery battle category, and which of these three ETFs wins it?
Yeah, my mystery battle category is going to be drawdown risk. And I wanted to look at this specifically to see if the specific tilts of these funds resulted in different portfolio risk in down market specifically, because SPGP obviously has a very value tilt. MOAT is kind of in the middle. And right now, OMFL is a little more growth tilted, but of course that can change on potentially a monthly basis. But that having been said, looking back at the history during two of the more, I guess, severe drawdowns back in 2018, right before the Fed pivot, SPGP actually fell more than 8% more than the other two ETFs. The 2020 COVID bear market, SPGP drew down more than 9% more than the other two ETFs. So during these two periods, there just seems to be an extra level of downside risk in SPGP compared to the other two. Now, if you look at other time periods, SPGP has held up a little better. It's kind of kept pace with the other two ETFs. But yeah, again, if you're concerned about where the market's headed from here, based on any number of factors, I think you want to consider how much these funds have drawn down in the past. And SPGP just looks like it may have a bit more downside risk than some of these other funds. But my overall winner in this category is going to be MOAT, because if you look over the history of all of these funds, MOAT has collectively, I'll say, held up better than the other two. It has drawn down less. So I think there's perhaps, at least historically speaking, a little more downside protection. So I'm going to go with MOAT as my winner in the battle category.
Well, that takes us to the part of the program where our judges can give us their overall battle winner, and my scorecard is all over the place. So I have no clue or idea how this is going to go down. So let's have our judges tell us. Dave, what is your overall battle winner for today's contest?
Well, I'll start off by saying I think all three of these funds are pretty solid. I do like the selection strategy. I think they're very well thought out and well targeted. So if you're looking for a multi-factor fund, or even one that's targeting growth, or even some of these other factors in here, I think all three of them, I couldn't argue if somebody wanted to invest in any one of them. But with that being said, I'm going to go with MOAT as my winner. I just think the wide MOAT strategy has a long history of performing well. MOAT specifically has performed very well historically. And I think it just makes a lot of sense because, investing in companies that have some sort of durable competitive advantage, I think just makes for a great long-term investment. So again, with the caveat that I think all three of these ETFs are solid, I'm going to choose MOAT.
Got you down for MOAT. Thank you, David. And your final chance to weigh in with your overall pick and winner. Frank, give it to us.
Ron, Dave, I'm going to go with SPGP. I think that its stock selection process is very quantitative and clearly defined. So you know what you're getting in terms of what the portfolio is searching for and what comes out in those final 75 securities. And like I said before, I'm a fan of investing in areas of the market that are undervalued perhaps, and this really is growth at a reasonable price at a PE of 14.3 with some pretty solid returns going back to 2011. So I'm going to go with SPGP on this one.
Our judges have spoken, and according to my battle scorecard, we've got a split decision here, folks, between MOAT, which was David's choice, and SPGP, which was Frank's choice. And Frank, pretty much for the most part, stuck with SPGP as his overall winner in most of the categories. And he made his arguments very clear. He likes the better relative value of the portfolio that SPGP has, of course, relative to the other portfolios, valuations, in his opinion, look more attractive. And of course, if you're an investor, that's the whole point, right? Buy low, sell high. And David making his argument in favor of MOAT, which has a formidable performance history, but it is the past, folks. I know that you're still making future decisions based on the past. We just can't escape that as humans, can we? But nevertheless, he made his arguments very strong. He chose MOAT for his performance as well as mystery and overall battle winner. And yes, there is something to say about companies and looking for companies that have a monopoly, a unfair competitive advantage, and that's what MOAT is all about. Thank you to both of our judges for slicing up and analyzing today's triple header. Very well done.
Thanks, Ron.
It's always a pleasure. Thanks, Ron. Thanks, Dave.
Well, I hope you enjoyed today's ETF battle, and a big thanks to also to our viewer who sent that to us, Mike Reyes. Well done, Mike. We appreciate that. If you've got a certain ETF battle that you'd like to see, send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you on the next episode.